From the heart of Silicon Valley, it's What's Up in the 90s. An entertaining look at people, places, and things, and how they affect you, your family, and your career as we move into the 90s. Now here's your host, Brian Stuckey.
Hello, welcome to What's Up in the 90s, and we've got a show that hopefully is going to be pretty educational to you. We've got one of the best loan officers in the Santa Clara Valley with us today, Jeannine Gallant. I know she's probably going to blush hearing that, but it's true. She's very good at what she does. She's put a lot of people in the Santa Clara Valley into homes as first-time home buyers. And she's also experienced and expert in refinancing. So we're going to, a lot of people out there have requested information about how do you get into a home, what does it take to refinance your home. We're going to find out today with Jeannine. Jeannine, thanks for being here. Sure. Jeannine, first thing I want to talk about purchases to begin with. A lot of people, when they're first thinking about buying a home, they don't know what it takes. They're it's a big investment for them. But just give us an idea, when somebody's interested in buying a home, what's one of the first things that they think about doing?
Well, the first thing that they should think about doing is to contact a loan officer and get pre-qualified.
Okay.
Set up an hour meeting, go through their financial history and background and down payment and so forth, so we can pre-qualify them for the price range that they're looking in.
Okay. And what are some of the questions that you might ask them in order to put some information together?
Income, how long they've been on their job, how's their credit, how much down payment they have. And it's a combination of all of them. It makes sense underwriting that we do, so we pull the factors together.
Okay. Now, what do you... Now, this is going to be kind of tough, but you real estate agents eventually get involved. Mm-hmm. Would you recommend that people get a hold of a loan officer first, or a real estate agent, or does a real estate agent usually work with them, then send them to a loan officer?
Most of the good realtors will, before they even work with the client, send them to a loan agent to get pre-qualified, so they're not out running around looking at homes, showing them homes out of their price range and so forth. So the first step really is, you can't get around it, is to meet with a loan officer.
I guess it'd be pretty difficult going out, you see a home that you really like,
and you can't qualify for it.
And you can't qualify for it to begin with. Now, you mentioned income is an important thing. I imagine credit is going to be an important thing. In today's market, you know, it's very difficult for people to come in and put X amount of money down on a home. Mm-hmm. But if you can give us some numbers, for example, how much do people need in order to get into a home? How much money do they need to come up with in order to get in?
Brian, it really depends on their income, basically. We do have one program out there that's a no money down that we offer. Zero down. The seller basically has to carry 20% up to a loan amount of $200,000. So if their income's there, they can qualify for that program.
Okay.
You know, and then there's other programs we have for first-time home buyers, MCC, which makes it easier for them to qualify also.
Okay. Now, just so you know, we might be dealing with some people that are brand new home buyers. When you say carry back, what do you mean by carry back?
The seller will take a...
And this is with 100% financing, basically. Zero money down, an owner carries back. And what do you mean? Right.
You'll have 80% first from the lender, and then a 20% second from the seller. So in essence, you'll be going in, you're putting no money down. The lender will loan you 80% of the value of the property, and the seller will carry 20.
Okay.
Okay.
And is that pretty common in today's market, or?
It's a relatively new program. I don't know. It's been around for a few months at least, but it seems to work well as long as the seller is willing to go along with that.
Okay. And what about gift money? Let's say that a seller isn't willing to carry back, but somebody's able to borrow X amount of dollars, maybe equivalent to 5 or 10% from a family member or something. Is that possible?
It is possible. Typically, they like to see the buyer with 5% of their own money. But there are some programs where you can do 20% down, all gift.
Okay. Now, now some people, let's say they don't have any problem as far as putting down payment down. They can borrow money from someone else, or a gift. Mm-hmm. They get a gift letter or something. Now, how much does credit come in? Can somebody who's got some credit derogatories or credit problems get into a home you know, if they do have a down payment, or what are some of the scenario there?
Yeah, typically we look for 2 years of good credit history since, you know, any of the derogatories occurred.
So 3 years ago, if they had a, you know,
they could have had all sorts of credit problems, as long as they haven't had any since. And the lenders are flexible. As long as maybe you have 1 full year worth of good credit history, then they'll consider it. Typically, though, if you do have a credit problem more recent than a year, then you're going to need to put more than 10% down. You'll need probably at least 20, 25. So obviously, the more you put down, if you've got bad credit, it'll offset that.
Okay. Now, one thing is we're talking about purchases now. We're going to eventually talk about refinancing. What's your opinion on today's market? You've been, you know, involved in financing for quite some time now. What is your opinion in the markets that you've seen before with real estate? You were around when it was going nuts, you know, for a while there.
Yeah.
How would you compare that market? When was that? Maybe 2 years ago?
Right. A year and a half ago.
Yeah, and compared to today, what are some of the differences that you saw when we had the real estate boom compared to what we're seeing right now?
The rates are a lot better right now, and the prices have basically rolled back to where they were, you know, a year and a half ago. So you can get some really good deals out there, and the sellers are very anxious to sell. So there's lots of different options. You can get the seller to pay your closing costs, to carry back paper. Everything's a little more flexible, whereas previous, there were no options. You went in full price and you paid closing. There wasn't much room to negotiate. So it's a great time to buy right now.
Okay. Now, when somebody they're putting together they're thinking about making a purchase, what can they expect to spend? Let's say if they were looking at a house, what would be the medium range house? About $170,000, maybe more, about 200? About 200?
225, yeah.
So let's say they had 10% down, which would represent $20,000. So they're making a loan for $180,000. What are some of the closing costs that they can expect that they'll incur in putting this purchase together?
Okay, you're roughly looking in the neighborhood of $5,000. It depends on which program they choose, how many points they want to pay, whether the seller is going to pay any of those. So if they're short on closing costs, we have no point options that they can do.
Okay.
That's the biggest bulk of your closing costs is going to be your points. If you know, do 2 points on that, that's $3,600 right there on a $180,000 loan.
Okay.
You know, certainly if you have it and you're going to keep the property for a long time, you're better off paying the points to keep the rate down low.
Okay. And they've got different programs like the 30 doing 30.
30 doing 7, 30 doing 5, right? So we've got some great programs on the market now that we didn't have last year. The 30 doing 7s, 30 doing 5s, that give a lot more lower rates than the straight 30 or fixed.
Okay. Now, we are talking about purchases, so in first home buyers, I know they have FHA programs, which I don't believe that you're so much involved in FHA.
Yeah, we don't do FHA VA through our office.
Okay, but they can contact you probably and find out more about that if they needed to, at least where to direct them. But what about MCCs? What are MCCs?
It's a county program basically for first-time home buyers. They have designated limits of the maximum purchase price. I think it's like $189 and then $210. They have different target areas. Basically what it does is it gives the home buyer a 20% off credit for, I can see that smile coming, for principal and interest. So you basically would qualify with a 20% discount, so to speak, on your mortgage, making your ratios a little more in line. So basically what it will do is allow you to buy a lot bigger of a house than you could typically qualify for.
Okay. I think income's an important thing. If you make too much money, you can't get in.
Right. They have a limit, and
the guidelines. If you make $1 million a year, they wouldn't consider you.
It's in the low 50s is your maximum income that you can do.
I make Jeannine laugh every once in a while. We work together at California Mortgage, but she is indeed the expert as far as purchases are concerned. So I am learning something here, but when I'm looking at her, I'm kind of giving her some funny faces as well. Now, is there a situation where, you know, a person makes $4,000 a month, and they've got, you know, if they make, let's say they were making a good income, 4,000 plus, and they're looking at a home, $150,000 rates, maybe a condo, but they did have some derogatories, let's say a year and a half ago. Are you saying that they would have a difficult time getting in a home? Or
a year and a half ago, no.
How about a year ago?
A year ago, with offsetting factors, good job stability, you know, they've saved a lot of down. And the most important thing is if you have had bad credit in the past is to try to reestablish it. You know, once you've cleared all the accounts, you need to open new accounts. The lender will look upon that more favorably.
Okay. What would your recommendation be then for people that are interested in purchasing? I know I've had situations where somebody came and they're interested in buying, but they haven't contacted, well, they have contacted a loan officer, but they haven't talked to a real estate person. They haven't actually gone out and started looking at homes, but they're interested now. What are some of the things that they can prepare for in order to make them the most qualified or best qualified that they could be when they enter into a purchase contract?
Well, basically the pre-qualification. You know, meet with a loan officer, find out your different options. You can qualify for a lot more loan on an adjustable typically than you can on a fixed. You know, so find out your different options and then find a loan that makes the borrower feel comfortable. Some people only want a fixed. Well, that's going to limit their purchasing power. But at least they'll know the parameters of, you know, when they're out there looking.
As far as their credit, somebody who doesn't have much credit, would you think it'd be a good idea that they open up accounts, or in fact not open up accounts, or if they do have a lot of accounts already, credit card accounts with large balances on, do you think it's a good idea to pay them down? What are some of the things that, as far as credit?
Well, credit's always a good idea to have it. And one of the guidelines is if you have bad credit, they want reestablished credit. So you do need to open the new accounts. If you don't have any credit, it's not necessarily going to hurt you. But we do have the quick qualifier loans, and if you don't have any credit, then they won't, you know, allow you to do a limited doc situation because they need, basically they're lending you based on your credit history. So credit is always very helpful.
Okay. When you say quick qual, you mean what?
It's a limited doc. It's basically designed for self-employed people, so they don't have to go through their partnerships, tax returns, and so forth. But they need to have very good established credit. Okay.
Well, good. That covers the purchasing. We're going to come back and talk about refinances in a moment here with Jeannine. Before we do, I want to thank California Mortgage once again for sponsoring our show. California Mortgage at the Prune Yard in Campbell, the big tall one. And you can give us a call at 559-0100. I'm a loan officer there as well as Jeannine. So if you'd like to call and get some more information with purchases and refinances, we'll be glad to talk to you. We'll be right back to talk to Jeannine. See you in a bit. Jeannine Gallant from California Mortgage. She's a loan officer there. And Jeannine, we're going to talk more about refinancing now. Apparently now is a great time to refinance. There's interest rates have been lowered quite a bit because some moves that the federal government have made. Before I do, though, I want to ask you a personal question.
Okay.
As a loan officer, you work with real estate agents, correct?
Mostly, yes.
So, and you work with men and women, that type of thing?
Uh-huh.
Do you find being an attractive woman like yourself? I'm teasing you. I did that because I want to tease her. But what is it like working with real estate agents, though? I know that a lot of loan officers, it's very demanding with them, you know, working with agents. And we're going to talk about refinance in a moment where you're just working one-on-one with the borrower.
Right.
What is it like working in a triangular situation where you're with the borrower and the real estate agent?
Well, it's a little more difficult, but I find it more rewarding actually because everybody's happy in the end of the transaction. You know, you're certainly having to please several different parties as opposed to just doing a refi or working one-on-one with the client. But it's typically no problem at all. You know, the realtor's concerned, they want their commission, everybody wants it to happen. And all of the realtors that I work with are very good professionals, so we all work together, and actually it's a help.
Okay.
You know, the realtor can calm the client down, and, you know, we can all work together.
Just so some people that are watching the show today who are interested in buying a home, or maybe a second home, what are some of the frustrations that if you could let them know that they might encounter during the course of this time? What are some of the things that frustrate the borrowers that might, if they're prepared for it, might help them out?
Yeah. Well, excuse me. I think the biggest thing is people don't realize all that goes into a loan package. And no one can really anticipate, no matter how good you are of a loan officer, every little thing that the investor is going to ask for. I try to ask for everything I can up front. There's certain things, you know, you might not need. So if I know I might not, I'll try to hold off on it. But sometimes, sure enough, you do need them in the end, and then you've got to come back for more documentation and stuff. So I think the buyers need to just basically have all their files open and realize that, you know, we're going to need access to them.
Okay.
So it's important for people, if they are going to be buying a house, to keep their bank statements, keep everything. You know, I've had people come to try to buy a house before, they've kept nothing, no records of anything.
Mm-hmm. And then what do they do? Like, let's say somebody can't find their W-2s or the taxes. What are some of the things you have to do in order to get those?
Well, then you need to go back to your employer and get them, which can slow up the process. You know, I don't know how you get a new tax return. Hopefully your accountant has one on file. But it can cause problems, so it's definitely important that you keep everything.
Okay. Now, as far as refinancing, interest rates are dropping, and you know, the industry is booming right now as far as the mortgage side, where everybody's refinancing. Is refinancing open to everybody?
Sure, as long as you own a home.
Okay. But when you're talking about interest rates that are down, let's say on 30-year fixed mortgages, they're down below 10%. In fact, they're down mid-9s or...
Low 9s.
Low 9s.
Quarter, 9 3/8.
Now, are those interest rates for everybody? The 9.375s or 9.5 interest rates?
Well, it's what we call A paper for borrowers with good credit or offsetting factors. By no means do I want to scare anyone away. If they've had credit problems in the past, you can still, you know, obtain those rates. I have a client right now that had a bankruptcy in '86. They haven't established any new credit whatsoever, but their mortgage history has been very clean. They've had no mortgage lates. They're going to be able to go ahead and obtain, you know, 9 3/8, 9 1/4.
So they can get the A paper rate?
Right.
Okay. What are some other criteria that you look for to determine what, if somebody is a solid, is qualified for an A paper rate, you know, that we're talking about?
It's a combination of things. I mean, I can't say if you've got high income you can have it. If you've got good credit you can have it. You need to have the good credit. You need to qualify with the ratios that we expect.
And what do you mean by ratios?
Basically what we do is in qualifying we take the principal, interest, taxes, and insurance and divide it by your gross monthly income. We'll give you your housing ratio, and then principal, interest, tax, insurance plus your debts divided by your income will give you your overall ratio. And they're flexible. Typically your Fannie Freddie guideline on 80% is 33/38, but there's lots of room to move in there.
Okay. And a lot of people call and they ask questions with regards to these new programs, like the 30 due in 5 and 30 due in 7, 30 due in 10, that type of thing. Can you explain a little bit about those programs? How are they different from a straight 15-year mortgage or a 30-year mortgage?
Okay. Well, the 30 due in 7, 30 due in 5 work identical, basically. The 5-year fix will roll over to a 25-year fix after the 5-year period. And the 7-year one will roll over to for 23 years after the 7-year period. So it's basically a 30-year loan, but you've got it fixed for the initial period of 5 or 7 years. On jumbo financing, we have a 10-year fixed also. That one will roll over to an adjustable, though, but the typical 5 and 7-year fix will roll over to a fixed rate at the end of that period, and how they do it is 0.5% over the Fannie 60, which probably means nothing to anybody. It's basically current market rates at the time when it rolls over.
When it rolls over after 5 or 7 years, they're going to adjust.
Right, and you need to be aware of it. If you're going to be getting one of those loans, they have certain conditions which they'll roll it over onto. You need to still be owner-occupying the property, and you have to have no mortgage lates. So it's not an automatic rollover. If people aren't careful, you know, they could find themselves with those loans in 5 years and maybe have moved out and want to roll it over, and it's all of a sudden due and payable.
Okay, which is a disadvantage there. What are some of the advantages and disadvantages of doing a mortgage like a 30 due in 5, 30 due in 7 versus a 30-year mortgage?
Well, a 30-year mortgage, if you're going to keep it long-term for 15, 20 years, that might be a more conservative approach to take. I'm refinancing my house right now on a 5-year fixed. I don't anticipate staying in that house for more than 2 to 3 years.
But you get a lower interest rate?
You get a lower interest rate, lower points on it. You know, but the disadvantage is if you do decide to keep it, and in 5 years the rates are 14%, you could be looking at a real hefty mortgage than you would have wished you took a straight 30-year fixed.
Okay.
So it's a little bit of a gamble.
Okay. Now let's talk about mortgage brokers versus direct lenders. Let's say an institution like Great Western or something like that. How does a mortgage broker, is there benefits of working with a mortgage broker, or is there benefits working with a direct lender like Great Western? Explain to people, they're kind of confused about brokerages and what they do.
Right, and how we operate. I think I wouldn't work with anybody but a broker, in my opinion, just the fact that we're more flexible. We can broker to Great Western, to Home Savings. Basically, all the S&Ls now are open for wholesale business to us. So basically what that does is just give the borrower more shopping power. For instance, if you were buying a home and you went into Great Western or someone tried to apply for a mortgage, they turned you down, you would have to start a whole new loan package somewhere else, which would take another 30 days to get all the information together in their name, and then try again. Whereas if you go through a brokerage, we can just, shop it along, the same package. So it saves time, basically, and we deal mostly with mortgage bankers where we get our fixed rates, which are a lot more competitive than your banks and S&Ls typically.
Can people save money? Now, one thing is that what you're saying is that the service that you offer is that you can find what's the best program for them.
Right.
By working with a number of different lenders and investors or whatever. Can they save money, though, by working with their brokerage versus going with directly to a lender?
Well, certainly, because they're going to get a lower rate and typically lower points. So,
okay. Why would they get lower rate and points?
Because we get most of our money from mortgage bankers who are wholesaling it to us, and we can just be more competitive.
Okay, so you mortgage broker get wholesale versus retail rates.
Right.
Okay. What are some of the most unusual, on the lighter side of things, you personally, what are some of the interesting loans that you've had in your time? Let's say a purchase loan, maybe something that was I want to hear about a heartbreak one that you've had that was different. You don't have to name the people, of course. But
I'm afraid to give any scenarios. I think they'll know who they are.
Is that right? Well, then don't use your second best one. But maybe something that was kind of a real difficult for for you to go through, and also maybe one that just was really pleasing to you, that just it made you feel pretty good about putting that package together or putting that loan together. Do you have any things off the top of your head that you can think of?
Well, typically I feel good, anytime I do a purchase because they've got a new home, everyone's happy. So it's a very rewarding job as far as that's concerned. Yeah, I've had some very wild loans in the past that, I've gotten them all through, but they've certainly been difficult.
Mm-hmm. It must be difficult, too, as I'd imagine, no matter which way you look at it, if it's a real easy loan, a real difficult one, your time and effort is about the same going into each one?
Well, not necessarily. There's certainly some borrowers that are a lot more difficult to work with and to coordinate it, but that's half the fun of the job, and that's basically why I'm doing what I do, because I like the challenge.
Mm-hmm. Now, what got you interested in getting involved in the financing of homes, and what got you into real estate, basically real estate financing?
I've always liked to buy and sell on my own, and I figured I might as well be in the hub of it. I finance my own properties, refinance them, and also you're in the middle of it, so you can also find certain deals and so forth when they come on the market. And I studied finance in college, so.
Mm-hmm. So it was a natural transition for you to get involved in that.
Yeah.
Okay. Now, I want to get right back to refinancing too, because you get all sorts of different types of people coming in. And when I mentioned before about can anybody refinance, what if somebody comes in who's in default or in a foreclosure situation, or somebody's got a bankruptcy, maybe a major thing? A lot of times they probably feel like throwing their arms up in the air and giving up. Is it possible for those people to receive financing?
Yeah, certainly it is. You won't get your A paper rates, the low 9s and so forth. They have B and C paper is what they call it in the industry, higher rates and so forth, as long as you have some equity in there. Typically, if you're in default or bankruptcy currently, you can't really get too much more than a 75% loan to value on a refi. There might be some people who are doing a little higher than that, but that's typically the norm. So you need to have some equity if you're in that position, but certainly, it can be beneficial to refi.
Okay. And how much do you think people can borrow up to? Let's say that they are in a bad situation, their credit's a little tough, but they're at about, their equity is up to about 80% of their home. Let's say they make good income. What are some of the scenarios? Is it basically like if you're up to 80% on your home, there's no way you can get a loan, or do you need some padding in there?
Well, I hate to say any set guidelines. I mean, everything's different, and you really need to, on a loan, look at everything.
Okay.
You need to have it all in front of you and piece it together. But typically, if you do have bad credit currently, 80% would be the absolute max.
Okay.
You know, but it depends. Some people think they've got bad credit, and really they don't. Other people think they have great credit, and when I run their credit report, they don't either. So, you know, a lot of the consumers aren't aware of what's good credit, what's bad credit.
Okay. Real quickly, we're getting ready to end the show here, but do you project anything in the future as far as interest rates or the real estate market?
I wish I could answer that intelligently. I have no idea. I think the rates should maintain for a while here. You know, B of A primes come down and so forth, so hopefully the rates will continue to drop. But they're very attractive right now. And I say to people, don't wait, don't be greedy. You know, if it's out there.
Do it now.
Do it now, yeah.
Okay, great. I want to thank Jeannine Gallant for being with us today. Jeannine, thanks for your wisdom and your advice for us today. Join us next week for another exciting show of What's Up in the 90s. Good night.